Thomas Mundy is from Renaissance Capital. He joins us now from Moscow. Thomas, thanks very much indeed for joining us. Why now, and how much do they want?
Well, according to the Ministry of Finance, in the budget is $17.8 billion. Whether or not they're going to tap that much is a question mark, because, of course, the oil price is averaging $75 a barrel from the start of the year. The government works off about $58 a barrel, so it may mean that they don't actually have to tap the full amount. But I think the important point is that this is a deal. That's going to be already has been very well received by the market, and I think should be very well subscribed.
Defaults of the past forgotten about now?
Well, of course, this is a completely different environment in Russia to 1998. Russia's got just shy of $450 billion of foreign exchange reserves. The oil price is at $85 a barrel. And, of course, we're in an interest rate easing cycle. We've seen 12 consecutive rate cuts from April last year, and there's scope probably to keep lowering rates, at least for the next 3 to 4 months, probably 50, 75 basis points from here. So all in all, that's a very good environment for the Ministry of Finance to go to the market. Absolutely,
but then that brings you the other side of the coin. Why does it need to when it's got all that money?
Well, the other point, of course, is that Russia is running, from having had years of running a budget surplus, it now runs a budget deficit. Again, going back to the point I made earlier, last year the government was forecasting 8.5% budget deficit. It came in at about 5.9% budget deficit, and that's because of course, oil prices have surprised to the upside. Now, the government needs to fund that budget deficit. They can do it in many ways. One, they can tap domestic markets, or they can tap external markets, and that's obviously tapping external markets is the route they've chosen to take here.
Yeah, stiff opposition, or competition, should I say, here as well. I mean, we've got Greece in the market, we've got various other nations in the Eurozone who've got their own deficit issues, and of course the UK as well, not least, of course, the elephant in the room, the US and its issuance as well. So how does it compete with them?
Well, I mean, we can only go by what by sentiment or anecdotal sentiment we've seen in the market so far. A good way of looking at that is looking at the weighting of Russia in emerging market mutual bond funds, and the weighting has gone down quite markedly to an 8-year low at around 8.2% for Russia, from around about 9.9% before. So that suggests that bond investors are making some room in their portfolio to pick up this sale. Anecdotally, it seems like there's plenty of demand.